Hi, and welcome to this episode of On the Money. First up, a rather contentious matter, the difference between a contractor and an employee. It's not always clear-cut. The Courts and Tax Office take a number of factors into account when determining the actual status. They consider the whole relationship and make a decision on balance. Any written agreement stating the nature of the relationship is certainly relevant, but it's not conclusive and should not be relied solely upon. Both employers and contractors need to be fully aware of their situation, as serious penalties are involved with sham contracting arrangements. The superannuation guarantee rose to 9.25% on July 1 and will continue to rise annually until 2020. Employers should have updated their payroll system to reflect the new rates. Employees should make sure that they're receiving the increased benefit. National minimum award rates increased in July. These new rates now apply for both full-time and casual employees. Pay rates for employees earning above the new national minimum award rate are not affected. The ATO is continuing its focus on high-wealth individuals and their relationships with trusts, partnerships and companies within a group as part of their audit schedule this financial year. Focus areas for this group of taxpayers include shareholders using the business's lifestyle assets for private purposes. This can extend to a broad selection of assets, so talk to us if you think you might be affected. Consumers are again urged to be wary of cold callers claiming to represent ASIC or MoneySmart. These offshore cold callers claim that your credit union, building society or bank have overcharged you and ask for your personal bank details. It's a scam, and the best protection is to simply hang up. Most people think estate planning is all about death, but there's more to it. Estate planning should start early so that the different stages of life are recognised and planned for. After all, your financial needs and situation change as you age. Most people start out being focused on accumulating assets. They then look to maximise them, then organise and finally protect their assets. If you haven't established an estate plan, the best time to do it is now. And if you have a plan, make sure you review it regularly. A large tax return is not always good news. Hundreds of clients of a Goldfields accountancy firm were negatively impacted after the firm incorrectly claimed millions of dollars worth of expenses on their clients' 2012 tax returns. These were based on the miscalculation of work-related travel deductions laid out in a 2004 ATO tax ruling. It's expected these clients will now have to repay the ATO. Have you lodged your 2012-13 tax return yet? Individuals and small businesses that aren't on a tax agent's late lodgement program must lodge their return by October 31st, or they could face financial penalties from the ATO. These penalties have increased by 55%. So to avoid them, lodge your return by October 31st or ask us prior to that date if you qualify for later lodgement. That wraps up this episode of On the Money. If you have any questions about these or other accounting issues, we'd welcome your call or email.